Thanks for checking out this week's FinPrep Trading and Investment video newsletter. So SPY, we did get a bit of volatility on Jackson Hole Friday, but still within this tight trading range above prior all-time highs. The trend line up from the 420 high still holding, didn't quite revisit it all the way, but I think on the positive side, beginning to approach more oversold conditions on the ultra fast and even the fast stochastic, as indicated by the red line. So once we get our lines crossing, the yellow in particular, crossing below the red, you're then set up to be oversold, which then, particularly if price can maintain above trend line, would argue for, or at least create the conditions that would allow for an increase and move to perhaps new all-time highs, 220, 222, and so forth. So 6 consecutive weeks still hanging in there, still not massively above prior all-time highs, but again still hanging in there. So that's about all we have on the SPY. In terms of dollar, we were looking at that 24.25 zone as discussed last week for a potential move, and the move we got. So even prior, dollar moving up into approximately 24.50, and then some nice follow through on Friday after some kind of craziness intraday, which is playing through on multiple assets. So, but basically looking at UUP, we discussed and we went through the price history, but range bound, and so this being the lower end of the range, particularly in 2015, it's been the base for many little moves anyways, but moves nonetheless. This 24.25 area, not ultimately unsurprising to see that this was a zone of support. So the question obviously is, does this continue? Can it continue? Taking out, or revisiting 25 or 25.50 and possibly even 26, which would capture most of your basically chop we've been in since the blow off top in March of 2015. So this having historical negative correlation with commodities and gold in particular, we'll take a look at that. So that's why we are watching this zone as a potential indicator. Not also that, but also, we looked 2 weeks ago at the seasonality of gold, and we saw that August was a strong month, but September and October not so much. So that has obvious implications with regard to timing of, establishing new longs, for example, and or taking the other price side, which involves more risk. But again, so that's well-worn material. We're definitely free to the 2 weeks ago video about precious metals pummeling the stock market. We go into seasonality of gold price there. So let's break this UUP dollar index ETF into its constituent parts, and let's also take a look at the negative correlation with gold, and that matters for reasons we'll discuss later. But basically, so here's a correlation on a weekly basis. This is a weekly charted GLD. So we're looking at weekly bars. And basically, on a rolling 20-week basis, GLD, which, more or less is going to track the price of gold, and UUP, a measure of dollar performance against other currencies. Most of the data is confined below that negative 0.5 area, which would be moderate negative, inverse correlation. And we actually have a good bit in this 0.75 zone. So you do get periods where, gold and dollar are strongly inversely correlated, where more or less you would expect if dollar goes up, gold to go down, for when gold is up, dollar is down type deal. So that's why we're looking at that. You'll notice there's a few peaks above the positive line. And so we're actually in that zone where it's technically positively correlated, at least on this basis. Though if we see that relationship change, as it historically does, and become negatively correlated again, that then has implications one on the other. So this is why we watch both. And then just a quick search yielded some results on UUP. Basically 80% more is of UUP as a basket is basically established by a very heavy short position in the euro, with the residual being chalked up to the Japanese yen and British pound. So when we take a look at the UUP itself, we realize that it's a basket of currency pairs against the dollar. And so we'll look at some ETFs here to kind of give us a bit more intel on, is this just a bounce off an event, news, or is this perhaps a base from which further sustained price rise could be supported. So in the end, basically, this chart looks very strangely similar to gold, does it not? Where we have a very strong beginning of year rally and then this pretty aggressive upward price channel. And in the yen, then the important piece here is the upper limit or band of a price channel is generally resistance. So price meets here, resistance meets here, resistance meets here, a bit of a false breakout resistance. You get the picture. Where were we? We were not terribly far off the upper end of that price band. So further follow through would take us down to the 92-ish, and possibly lower. But yeah, so that's the yen, and which was again a little bit more than 10%. The second component, or the primary component really, in the UEP is the euro. So here's a weekly chart of the euro long term, looking back at '08. And it had a sell off relative to the dollar. And you have your intervening rise into '09. And your rise going into the PIGS crisis, which caused a sell-off in the euro, and of course this final bit, which corresponds nicely to that massive rise in the dollar we looked at last week. Which then, dollar rises, that means it's rising against other currencies, and this currency, in this case the euro, would have fallen relative to the dollar. So where we are now is basically this long, choppy sideways trading range, similar to UUP, right? So about 113 to 103, let's call it. And within that sideways chopping range, you still do have, an upward price channel gradually and very slow over time, but basically price falling out of that, drifting upwards within the bands, falling out of that. And then here we are right up against the lower, so in technical analysis, again, this is support. So price finds it here, approaches the line, definitely finds it here, approaches the line, finds it here, and then finally breaks. So what was, basically a demand zone could then become a supply of the FXY zone. So a point where price would cease to rise, and or be pushed, rebuffed. So, and we definitely got that this week. So, not terribly sure how much further the euro has to fall. Perhaps maybe 106, but it's not unsurprising to see it capped here. Is the main point. And the last one we'll look at is the pound, the British pound. We had a false breakout leading into the Brexit referendum. Price kissing the 250-day moving average, busting out of its little price channel that it had basically all year, and then a pretty massive drop. We got about 13% sell off relative to the dollar, as measured by the FXB anyway. And since then, basically been consolidating sideways and within 131 to about 126. And what do you know? Price was right up against that steeply declining 50 MA, and sold off on Jackson Hole. So, looking at those three currency pairs collectively and on their own, basically, it wouldn't be unsurprising to fathom a continued move upward in UUP. You may have some resistance here at 25 with your 250 and 200 daily moving average just basically flattening out. So yeah, it's not out of the question to wonder about the relationship, obviously, that then would have on gold, particularly as we saw again the negative seasonality, where gold tends to have quite a hard time in September and October. So that then opens the door for, well, if GLD can break 125, we can see a possible move down to 121, and then a more extreme sell-off, perhaps as low as, let's say, the 115 in particular, where you have your rising 200 and 250 DMA, as well as kind of the zone of support where prices bounced off on pretty much 3 occasions this year. So looking towards 115 as more of an extreme case, but definitely not entirely unforeseeable, and perhaps 121 in the more immediate term. And again, presupposing that 125 doesn't hold. So that, again, it will be most likely the dance between the dollar and the gold should that negative correlation reassert itself. All right, guys, so that is what's going on in currency land and with its impacts on GLD in particular anyways. So we'll just keep tuned and keep checking that out until S&P gives us something interesting to discuss as well. But movement in multiple asset classes, so no need to confine ourselves only to stocks. The investment universe is open up to retail traders in a way that it really hasn't been quite easily in the past. So, and that's by ETFs. But that's for a different discussion and for you to consider if those products are suitable for you and so forth. But just thought I'd bring it to your attention. It is something we watch, so it's something we report on. All right, guys. Hope you found this useful, and take care. See ya.